Hey everybody, it's Pete. Welcome to today's Best Stock Picks. It is Friday morning, April 3rd, 2020. Little schizophrenic market today, so a little bit less confidence. If you happen to watch today's episode of Stocks for Breakfast, you'll get a feeling for my conviction level today. We just keep going up and down and gapping in both directions. And this is really where a lot of traders are separated from their money because you end up in this potential change or trend zone. There's definitely some opportunities today. I had a couple of good questions and feedback of a couple of stocks to look at, specifically 4 different stocks. But I'm going to go straight into the charts. We're going to take a look at where the S&P futures are pre-market and why it's a little confusing. We had that really strong close yesterday, and then we actually pulled back and traded yesterday. We're kind of in the middle of yesterday's range, but a little bit surprising that we're a little bit lower. Job numbers coming out today. So let's get right into it. There's one obvious sector that you should be paying attention to today, but with less conviction. I know it sounds like jumbo shrimp, right? However, there was monster volume, monster one-day gains, and we're looking for a one-day, maybe two-day trade to follow through and then reevaluate when we see what happens in the price action after that. So let's actually head straight over to the charts, and we will get going on some ideas for today. So you can see here, this is actually where we closed yesterday in the general market. And as of this morning, kind of trading lower and gave back a decent amount of those gains from yesterday. So we're basically going to have an inside day today, which is almost 3 inside days in a row in the market, which is kind of a tight tape there, right? We had that. Let me just expand that out a little bit so you can get a little better picture. So you can see where we are now. So it's a question of, do we get outside of the previous day's trading range, which yesterday, let me drop down to the SPY. And it doesn't matter if you're day trading or swing trading right now because this actually applies the same. We had this gap down yesterday. We're looking to get bearish for bearish follow through and probably test down in this area. Oil numbers came out, or oil news came out, for like a better way of putting it. We tested yesterday's low, the low from Wednesday. Thursday held the bid, and we actually had what looks on the chart as a beautiful green day on a day that we expected fall through to the downside, but it was kind of chaotic. We actually, staring at this, watching it during the day, but then we couldn't get through the previous day's high. So not quite an inside day, but clearly struggling. Got all the way back up to there, and a few people, as a matter of fact, everybody asking me who are active traders in the private Slack group, am I holding overnight and looking for follow through? And the answer was absolutely no. When you see a stock or anything that can't get through that level, there's a reason. That's the right price. And until it can get through that price with conviction, meaning close above there with volume and stay there, maybe even for 1 or 2 candles on whatever time frame that you're trading, you have no reason to get involved unless there's really super clear order flow prior to that happening. Then you have every reason in the world to get involved sooner. So the obvious order flow, whether up or down, prior to a breakout will dictate how soon you get into the trade. In this case, we did not have that. We actually were looking for follow through to the downside, did not get that at all, had to struggle following through the previous day's high, which you can see here. So I did not hold longs at all. As a matter of fact, I hardly traded long at all yesterday because I had a bias to the short side yesterday, and now we're trading right back in the middle of this range. So I'm super happy that I did not hold the long overnight, but that's why. I mean, you eventually, my goal to you is hopefully you get to the point where you're reading the tape and you understand what are the best stocks to trade. So that being said, coming into today, we're looking at an inside day, so very little conviction. But what I am paying attention to now is look at how many days in a row the SPY has closed above the open. And if you're new to the channel, I use the SPY because it's 500 stocks. It's just an easier way to get a better feel as opposed to watching the Dow, which is only 30 stocks. I think that had its place in time, but the market's so much more complicated now. So this is interesting. Again, getting into reading the notes of the market, we're having quite a few days where we're closing above the open. So it's going to tell us whether or not this was a short covering rally or a potential change of trend, which if you watch today's Stocks for Breakfast, that was a huge part, if not the entire video, of how that's where money goes to die. Potential change of trend is where money goes to die because you have an opinion, and you feel like it's only going in that direction, which it has been for a couple of months now. You start to put those same trades on and they don't work. You have to pay attention and use your results as feedback. And in this case, not following through as cleanly to the downside. So I'm not saying that we're reversing, but we're also not getting follow through. So that means it's smarter to reduce the risk exposure. So of course, we want to get to the meat and potatoes, the energy sector from yesterday. I'll actually post this link below so you can get in there and see which stocks might meet your own personal criteria. But you can see mine, obviously, average true range of $1.50, over 2 million, and actually closed positive by at least 1%. And look at the gains in some of these stocks yesterday with some really solid volume. I don't want to call out individual ones because you can see there's actually 37 here. There's plenty for you to go in there. But I want to make it clear this is most of these stocks, if we go into the charts, they're fighting obvious order flow to the downside. Most of these stocks were just beat up over the last couple of months with good reason, right? I mean, they were talking about oil down in the single digits. So this is, I want to make it clear, it's a 1-day trade where I'm looking for them to stay above yesterday's close, stay above yesterday's high, and stay above the open. If it doesn't meet all three of those criteria, I'm letting them go because we're fighting the longer term order flow. We're just looking to capitalize on yesterday's volume and price action. That's it. Lower conviction, but still a setup to possibly consider. As far as some other stocks, we actually had a request from Craig to take a look at a couple of stocks. We're going to take a look at those right now. First, LRLCY, which is L'Oreal. Craig, the one thing I'll say about this is that it doesn't look like it has consistency from one day to the next. For me, you get a lot of these gaps in tiny trading ranges. If this is a longer term trade, maybe, but not something that I would typically look at. So take that as you wish. I didn't really take a look at the volume, but obviously you can see the price of the stock here. And the other one was Estee Lauder. Estee Lauder not looking good right now. It's actually looking very similar to the market, but the one thing I will say is that it finally broke the support that it seems to have been holding. I would be a little bit more inclined to be selling the stock short, but not until it broke this 140 level, and even then 120 is the next support. Neither one of these stocks would be something I would normally trade, but if I was forced to pick a side in Estee Lauder, I'd be more inclined to be looking to the short side. But we do have short-term resistance here at 140. Uber and Lyft, same story with those two guys as well. They really pretty much trade in sync. I don't like either one of these long. I would need to see where we bottomed out, had a higher low and a higher high on the weekly or the monthly chart, or even something similar to what we see here. But we need to get above 30 in Lyft and Uber. Same thing, we need to get above 28. I don't like to fight all of this. I need to see the market prove to me that it's going to hold those levels. Some other stocks we're looking at, mRNA has been one that we've been watching for a while now. Excuse me, mRNA. And we've been saying, don't get involved, don't get involved, don't get involved until, and it looks like we had some really solid price action yesterday. And you can see a spike in volume as well. So not quite fuel, but it is an energy candlestick. Energy candlestick, in my terminology, the way we talk about it in the coaching program, is large volume, large green or red bodied candle. And in this case, we did. And you can also see the last couple of days was lighter volume. So this is pretty cool. I want to see, I'm not going to get involved here yet. I want to see another close for obvious reasons. We got above it here, failed miserably, failed, couldn't get above, and now we're through there again. So this is the 5th time it's trying to stay above 33. If it stays above 33, could be really solid. I'm sure it was really good to trade yesterday, but it wasn't on my radar. Yeah, it was actually some good follow through there if you were just day trading the stock. But we're not only talking about day traders. We mentioned that a while back. We're trying to cater and give some words of wisdom to both day traders and somebody who's holding longer. So I'm really trying to make a distinction between whether or not we're talking about day trades or swing trades. Interesting one that hasn't popped up on my list until recently is Eli Lilly. Closed 2% higher than the open. And look, 1, 2, 3, 4, 5, 6, 7 days in a row closing strong like that at above the open. The problem is 142 is resistance and 148 is potential target. So not really a lot of profit potential until it clear 148. If you want to take a one-day trade, if it clears this 144 level to 148, you do have $4 there, but it's up to you to decide what the trigger is up to that level. On the short side, we do have some financial stocks that I'm actually looking at. Although Discover actually has already pulled back for a few days, we do have some room down to 25. Not the greatest short sale in the world. There's a ton of stocks. These are really more stocks that are going in the tracking journal, COF as well as Square. They've already pulled back a little bit while the market was actually strong yesterday, and that's really the reason they pulled up. I want to start to train everybody to take a look at, okay, which stocks have bullish, in this case, bearish order flow, which stocks were also weak when the market was strong. So again, whether it's day trading or swing trading, you want to make note in your tracking journal of those stocks that showed relative weakness when the market and the tape was strong. Those would be the first ones that you look to short. If you really want to be a super advanced trader, you would start to put small positions on there, have them in your position summary in your account for if and when the market crushes again. If it does, you already have a small position, then you could add to what might be considered a good winning trade because of that relative weakness. So the one thing I want to stress going into today, as yesterday, which maybe you could tell from my my voice, conviction levels a little bit lower right now because we're trading higher, trading lower, news all over the place. I want to see a little bit of a better tape before we start to have a little bit of conviction. If you're on the Smart Money Alerts email, there was a super good question that was asked yesterday about holding trades longer. Why do some trades really are easy to hold 3 to 5 days, and some you're forced to take profits short? Quote unquote, what am I doing wrong? You're not necessarily doing something wrong. If you're picking good trades that are moving you in a direction, that's a good job. Pat on the back. That's awesome. Some trades just have the order flow to follow through. So and don't personalize it. If you do a good job of putting the trade on, and some trades just go woo, and you can't do anything wrong, they give you easy money, great. But if you make the same exact trade and it doesn't follow through, that's not on you. And I joked around about it in today's email that it's not you, it's me. And that's the same thing. It's the market itself telling you how far it should go. So be smart and always use your trading results as feedback to improve. That's very important. It's not good or bad. Yeah, it's great when you make money, stinks when you don't, but use everything as feedback to say, how did I read that? Could I do better next time? And sometimes you make really good trades that don't pan out, but that doesn't make it a bad trade. So if you have a really good one that doesn't give you the results you expected, that's not on you. You did your part by picking the right trades. If you want to get on Smart Money Alerts, I'll leave the link below. It's easy to sign up. I send the email out every day at 7:30. If you have any comments or questions or stocks you'd like to see reviewed, absolutely leave a comment. And please subscribe to the channel. That would mean the world to me. Be safe. Have a great weekend, everybody. Take care.